Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is January 25th, 2012. Big news event day today. We had the Fed statement come out at like 12:30, and then we had their press conference at 2:15. He had some news early on, so it was a pretty heavy news day. The market, and there is definitely a trend here that we're all seeing. It's not me just, being the one with the novel idea or the understanding of something to do with the markets, but everybody sees it. The market drops in the morning. It looks like things are going to go to the crapper. We get a nice 5 to 10 point push down lower. I mean, like right at the bat. Scares some longs out of their current positions, thinking that the market's finally going to start rolling over, and then all of a sudden, out of nowhere, the buying programs come on, people will get energized, and we start knocking off point after point after point higher, and that's what we got today. And it was very much buoyed by the Fed announcement that we got at 12:30. After that, it was just clear sailing. The Fed really didn't say anything new, outside the fact that they're going to keep interest rates at its current level all the way through late 2014. Now, for me, I'm thinking to myself, golly, why in the world are they announcing already to 2014? I can't believe that they would say that unless they were really fearful about, the current conditions in the market, and who isn't really? I mean, you got unemployment. I mean, you look at real unemployment, we're like 17, 18%. That's like 1 out of every 5 almost. You got inflation that you keep the interest rates where they're at right now, you're going to have inflation through the wazoo. You got food prices going up. You got gasoline prices already going up. I mean, let's face it. I mean, 4 years ago, back in 2008, gas was like at $1.85. Today, it's $3.39. You have commodities like bacon that's gone up 22%. You've got milk that is going up, eggs that are going up. That's food inflation. But the crazy thing is that when they report inflation, they take food out. But the food is really, when you start getting into hyperinflation, that is what people are fighting over and killing each other for. So food should be included in our inflationary readings, but they're not. But in any case, why am I going on and on about it? They're not going. I think honestly, the Fed would like to start increasing rates. I mean, it's been at these levels for like 2 or 3 years now, and you can't keep them there, and especially keep them there for another 2 or 3 years, and not expect inflation to start to kick in. It just doesn't happen, because you're essentially just printing money and printing money and printing money, like what we're doing right now, and there's no way to tighten that money supply. So, with that being said, if they're gonna be make statements like that, you gotta figure, my gosh, they must be really worried about the direction this market's going in. So, but as swing traders and day traders, do we really care about long term, 2014, where the market's going? Not really. I just figured I'd give you some thoughts. You get good earnings reports from like Apple, and you see them, shooting off to 460, and they're selling 60 or 70 million iPods and iPhones combined. The world looks like, everybody's wanting to consume and consume, but gosh, my honest opinion, I would love to know how much of those dollars that Apple generated, not that they weren't legit or anything, but I would just love to know how much of it was spent using welfare dollars and how much was using credit cards that are not getting paid off the next month, and so forth. U.S. still has a huge consumption addiction, and credit, and much of it seems to be a constitutional right these days. So, and I guess I gotta be careful, because the purpose of this discussion isn't to go ranting and raving, but Honestly, it's to talk about the last 25 days in the market here, counting weekends, I guess, because I'm really just going back to January 1st, where we have had a rip-roaring run in the market. I mean, just day after day after day after day after day after day, going higher. Going back to late December, I think we're up now 20 out of 24 days in a row. So that in and of itself is incredibly impressive, or maybe it's just 19 out of 24. Anyways, it's like 78, 79% of the time since late December that we've been up. And in the beginning of the year, we've only had essentially like 2 down days. I mean, yesterday you can't really count that as a down day. One chart though that looks interesting. I know I got a ton of lines on here, so I probably should have deleted some of them before I did this broadcast, but you have this trend line here that gives you a little bit of a flavor for the current slope of the trend lines this year, and then you got another one going back to late December, and then you got another one going off the October lows. So let me just get rid of that thing because that's useless these days. That used to be the neckline to the head and shoulders pattern that we had way back here, but we're not really caring about that neckline anymore. Let me put it this way, and I use this description a lot. I know a lot of people think I'm crazy because everybody thinks it's different this time. It's not different this time. It's a rubber band market, man. It always has, always will be. You get these expansions that are really fast, like what we've seen, and I think, since December 19th, we've gone from 1205 all the way up to 1325. So that 24-day period, we've gone up 120 points. Is that sustainable? Absolutely not. It's not going to sustain itself. So you got to start thinking like you're playing chess. You got to start thinking 2, 3 moves out. That doesn't mean you necessarily act right now, but you have to be ready for that time when you do need to act. And this breakout here looks great. It's out of like 3 or 4 days of consolidation. It looks like we're going to go testing maybe these highs here set back in last May, but I doubt it. Okay, that's what it looks like on the surface. It just looks like we're going to keep going straight up. It's not going to happen. I can't say that we're going down for sure tomorrow or even the next day. But there's going to be a day of reckoning here very soon. And I'm not calling for like a flash crash, but I am saying that there's going to be a 3, 4, 5% pullback. I think to the tone of somewhere between 40 to 70 points in the S&P. I think we at least pull back to either this trend line here, which is steadily rising each day, which be 30 or 40 points away, or we pull back to this one. And if you believe that the market wants to try to confuse as many people as possible, then you're probably looking at a break below this trend line here. Conditions in the United States and the economics behind it are not really changing. I mean, somebody was asking me yesterday, do I think that all we've been seeing here lately is short covering? Yes, mainly short covering. Why? Because we have all these daggum low volume levels, and I don't see that changing anytime soon. And do I think since like the recovery in September 2009, I don't think all of it's been short covering, but I think a lot of it is because the bears have been a little bit trigger happy to get ahead of the downturn, so they get loaded to the short side. They're wrong, and then boom, we get a short squeeze. So. But I can tell you that like a rubber band, when you pull it too far, when it finally lets go, it's going to snap back even harder. So I think honestly, when we're seeing these kinds of rips in the market, I think you're going to see a nasty rip to the downside. And that's not because I'm prophetic or anything else like that. Just that's how the market works. When we were going up here like this just recently, did I think that would come to an end? Yes, I did. In fact, I was calling for it to come to an end. I didn't know when, but I knew that in the very near future, which you can see here, it started breaking down after it looked like we were just going to go up forever. It broke down to the tune of almost 300 points, 250 points. So here we are again. We're going back up higher. Do I think it's going to end? Absolutely. And the higher we go, the harder it's going to be back down. So let's pick your poison. Do we have orderly, marches forward with orderly pullbacks and then another orderly march higher? That's ideal. This is not orderly. This is just we go up at all costs and pay the consequences later, which is what I think we'll see here. A couple other things. I really liked this little thing going on here in the Dow Jones. Huge bearish wedge that is forming. That's not to discredit the run that we've already had, but like I said about the S&P, there's going to be a pullback in the very near future. So heed the warnings. Very, very confident of it because it always happens. Not because, like I said, not because I'm prophetic, but because the market has always done that. And then too, I mean, also, I mean, look how oversold we are. I mean, they're in the daily, and then as well as the weekly, we're just pushing higher. Same thing with SPX. On the weekly, well oversold, and you can see on the weekly the volume just looks pathetic. Looking at the Nasdaq, you can see the same is true there. Very oversold. Let's look at a couple of trades that I talked about today. Steel, U.S. Steel. Very nice breakout of V-Ray, and a bunch of others jumped in at Few and Haas. He's the one that actually brought it up. And I piggied off of that idea, put a post on it, and give him the credit for the trade idea. But very nice breakout today. Good chance that it continues. Could see some resistance there at 33 when it tries to test the 200-day moving average. After the bell, you had Netflix that went up to like $108 a share and sort of settled there. Apple today, what a beast. Incredible. I mean, it's sort of a phenomenal thing because, I mean, a lot of this growth in this company's stock, looking at the weekly here, I mean, when things started going, you know, really bad, the stock was at $107 back in 2007, late 2007. Now, and we peaked in like October. Now the market's nowhere near where it was at before, but this thing is like 400% higher. Just amazing what Apple's been able to do with their products, and true testament to the ingenuity there at that company. Alright, but before I let you go, I do want to go over just a couple more charts just to go back to the S&P just to clarify myself so that you guys do see some of the stuff that I'm talking about. This is the share planner reversal indicator on the weekly scale, just showing you what we're looking at. You can see here that most often the reversals happen when we get the red to green crossover. Right here, red to green's touching. Good chance that those things with the slightest hint of selling start pushing back down lower again. We also have the daily share planner reversal indicator, and once again you can see there that it's flatlining as well. And just looking at it from a historical perspective, it does not stay at the very high extremes here for long periods of time. So that's something to be aware of also. Like the weekly indicator shows, it also doesn't stay very high. In fact, it hardly ever stays longer than what it's, you know, staying up at that extreme for very long. So be on the lookout. Be on the lookout for selling pressures in the days ahead. If you have the long position, start tightening up those stops as much as you can. Okie dokie. Y'all take care and God bless.